Good morning, everyone, and welcome to the Sirius Report. My name is Ken Shorjan, and today we're going to start something a little bit new in regards to how we have done some of the videos and podcasts on this channel. Now, of course, we're going to continue with the Paul and I dialogue over larger issues, 15-20 minutes or so. Paul is also going to be continuing his own podcasts put out, and as well as interviews. And something I wanted to try to take a look at on occasion is doing a little bit shorter format in regards to certain individual events that have taken place in the markets or in the multipolar geopolitical world today. In particular, there were two different stories that came out, and I thought there was such a interesting dichotomy between them that it was worth doing this shorter form podcast. So with that in mind, let me go ahead and bring about the two players and what they are looking to do in regards to backing their financial instruments. To give a little background, of course, for years, the insurance companies have primarily used commercial real estate as well as treasuries to provide income, a return on investment, to be able to back the assets and collateral of the individuals who have insurance premiums with them, i.e. in particular, whether it's housing, the commercial real estate itself, or anything else that insurance may cover. Now, we know over the past few years, as the economy coming out, especially coming out of the pandemic, has started to really decline, commercial real estate has fallen off of a cliff, and it hasn't even really begun to start how big and how much of a bubble it was. So insurance companies, besides the catastrophes in a short period of time, such as the fires in California, the hurricane in North Carolina, the hurricane previously in Florida, a lot of insurance companies have been taking major losses, even to the point where they are leaving states and or refusing to cover insurance for a lot of individuals and residences and businesses. But because of their losses with the commercial real estate and the rise in inflation, they also have been raising premiums on individuals. So the insurance companies, this is something that's important, not necessarily at this point for the United States and the West, but it's something we're going to bring up that China is going to look at dealing with here in just a moment. But with that being said, what is the U.S. looking to do with many of its financial assets, such as stocks and equities, bonds, the cryptocurrencies itself, ETFs, a lot of the derivatives and securities that are on Wall Street, as well as things like insurance itself? Well, we already know that Donald Trump is a big proponent of cryptocurrency, so much so that just before the inauguration, he came out with his own meme coin. He came out with a meme coin for Melania, and he has talked about creating a sovereign wealth fund where it would buy cryptocurrencies like Bitcoin to try to provide cover and collateral and reserves for the U.S. government. Well, he is now appears to be looking at taking this a step further. And because of what some of the Wall Street has been suggesting, some of the major players and hedge funds on Wall Street, the money managers, Trump is poised to create a regulatory framework for digitized stocks and bonds that could be traded over the blockchain. Now, this was reported by On the Money. And of course, what it has to do now is seeing about digitizing securities rather than what we have heard in the past of the CBDCs, the central bank digital currencies. Those are pretty much out the window, but to securitize pretty much all the financial instruments that are done on Wall Street and perhaps even in the country itself. That leaves, take a look at an example that's already taken place since Trump has come in office. We have the U.S. Treasuries that are tied to the stablecoin Tether, which then affects and drives the Bitcoin price. So whenever you see Tether and treasury yields, treasury purchases take place, you see the Bitcoin price spike up, or if there's a sell-off, you see it spike down. These are now integrated into each other inside this digitized world of financial instruments. So with that being said, what would happen if we suddenly had stocks, bonds, etc. on the blockchain traded 24 hours a day? How would we know who owns what? And would there be the transparency that is allegedly promised for trades that take place on the blockchain? That is what's happening on the US side. It appears the Trump administration is going full bore into digitizing securities, digitizing financial instruments, and backing them with cryptocurrencies. So instead, what does China do? Now, China has not been completely abhorrent to cryptocurrencies and the blockchain. In fact, they see the blockchain technology as something that is a benefit and a boon, especially with their involvement with BRICS, the Shanghai Cooperation Organization, SCO, etc. But instead, we know that China, Russia, Iran, a number of other countries have been buying gold. And it's one of the probable reasons why we're seeing the gold price spike, because much of what is reported by the West of gold flows going east is only the tip of the iceberg out of the water versus the opaque market that Paul always talks about, that has seen gold purchases in China and Russia going far beyond what is reported in the mainstream media. So with this being said, China, there was a lot of talk about the last BRICS summit having an announcement of a BRICS gold-backed currency. Now that was really just pie in the sky, individuals and alternative media looking for clicks. But the reality is they, at the BRICS level, they're more interested at this point in creating a equitable platform for bilateral trade, so that there is good monitoring and ledgers for trades between different currencies, whether it's the yuan and the ruble, whether it's the rupee and the yuan, whether it's the currencies that are from the other nations in the Eurasian Economic Union, the ASEAN, or the Shanghai Cooperation Organization. So they're trying to find a good platform for this. There have been obviously the CIPS, the SPFS, the alternatives to SWIFT that are doing this, but it wants to be moved to the blockchain eventually in some capacity, or as rather than call it the blockchain, a distributed ledger that has some form of transparency. But with that being said, if we're not looking at the BRICS nations putting into, the BRICS nations putting into a gold-backed currency at this time, many of the BRICS nations are looking at backing their own instruments and their own financial system with gold. Now, we're not talking currencies, but we are talking other financial instruments, and China appears to be leading the way in that. Earlier today, it was announced China is announcing a pilot program to allow certain insurers in the country to invest in gold to diversify insurance funds and boost their risk management capabilities. The Chinese National Financial Regulatory Administration, the NFRA, said the program allows insurers to optimize their medium to long-term asset allocations and asset liability management capacities. So rather than trusting it, backing in commercial real estate or any type of real estate that has the tendency to create bubbles. We know that there was a bubble in real estate in China a few years back. They've dealt with that pretty much. So they don't want the insurers to go ahead and allocate their risk management based on real estate, which has the tendency to go outside the norms when it comes to ups and downs. And of course, you don't want to necessarily have too many dollars, because reliance upon the dollar system is not as well, especially with the leading inflation. the potentiality of freezes, getting cut off from SWIFT, or trust in any type of Western asset allocation, treasuries included. So instead, they are pushing for insurers to back their asset investments in gold, physical gold. And you can see why, in many ways, China has been buying as much gold as possible, because you strengthen your own society, your own currency, your own financial system by backing it with the reserve that has been well known and trusted for the last 5,000 years, where in the West we are taking what is potentially a fiat currency in crypto and backing paper derivatives as well as financial instruments, which is backed by the fiat currency of the dollar, the fiat currency of treasuries. Everything is paper-based oriented versus physical allocation. So with that in mind, it's something that we're going to go ahead and monitor, see if it gets extended beyond just the insurance industry in China, and if it's going to move over eventually into the BRICS and the other Belt and Road type platforms. Anyway, just wanted to try this out, a more short-form podcast on a specific thing going on. I'm probably going to do another one in regards to the jobs report and the Fed, but that should be out as well. I want to thank everybody, as always, here in the Sirius Report community for all of your support, for helping us to grow. Don't forget to like, share, subscribe, comment, send this out to anybody you think it might be important to. And until the next time we get together, have a great day.